G'day folks, welcome back to Pete's Investing. It's the 28th of June 2024. As you can see, silver and gold have moved sideways since our last update. The US dollar has risen slightly and Bitcoin has dropped. And if we go to the heat map here, in the left there you can see gold, silver, US dollar and Bitcoin. Still predominantly bullish on our CCI 150 trend on the monthly, and predominantly bearish on all the weekly and daily, with the exception of the US dollar. It's bullish across the board on weekly, monthly and daily, plus a few other instruments. You may wish to view those other videos when they get released. In terms of a trading strategy, we look at the trend of the higher time frame. So if you're trading on a daily, we trade in the direction of the weekly, or if you're trading on the intraday, like the 1 hour, 2 hour, we trade in the direction of the daily time frame as a minimum. Step 2, we open a trade with a CCI has a fresh breakout from the CCI moving averages, and those moving averages are in the links in the description below should you wish to view those videos and add it to your charting software. And step 3, to close a trade, you close it out when the CCI enters back into moving averages, but also when the moving averages are entered on the price chart as well. So looking at gold first off, we look at the monthly here and you see it's a bullish break above the CCI moving average, but it's also broken above the moving averages of the price chart. But do notice we've got a bearish divergence, lower highs on the CCI versus higher highs on the price, and that's actually still rising. We haven't seen a drop yet, or no dramatic drop. On the weekly, it's actually the CCI is broken down below the moving averages, giving us a bearish outlook. And you can see there it's still above on the moving average of the price, but that's still a bearish outlook so far. And on the daily, we do have a bearish outlook as well, with the CCI still dropping off. We did also have this bearish divergence versus higher highs in the price, and that's actually fallen off. Now, we've drawn a target area there. You can see it's actually hit that with those candles there, and it's actually bounced off that support line at 22.86 for a number of times now. Also to mention, we do still have a bearish divergence here on the weekly chart versus higher highs in the price, and we expect that to fall off as well. Now looking at the hourly chart, I've got here the hourly, and we use here the daily as a reference if you're trading on the hourly. And what I've also got here is just to mention, I've got these red and blue arrows which indicate where the CCI is broken above or below the moving averages, so they're potential entry points, and that's where you typically go long when you see blue arrows, and that's aligned with the CCI, and going short when it breaks below, and that's identified by these red arrows. So again, going short predominantly at the moment, where the CCI is below on the daily, we take short trades only. So you would have start taking your first short trades from this point on the hourly. And again, this applies to any other time frame, an intraday like the 2 hours, a 15-minute, etc. I'm just using the hourly here as an example. So you would have taken your trade, a short trade from there, because that shows you a short positioning there on the daily, and that would have been a nice little trade to take and close out the trade when the CCI breaks into that moving average. So you would have closed it out near the bottom there with a nice little gain. This would have been a pretty much a break even or a small loss if you wanted to stop loss it, or alternatively continued in a downtrend. I wouldn't have added another position there because that was a very close price to that point there. I'd like to see it break a lot higher before adding another position, but that again would have been another little gain had you gone short during that period, and when you saw the price or the CCI break into the moving averages, you would have closed it out near the bottom there as well. Next we look at silver, and silver is bullish on the monthly. The CCI is above the moving averages. It's neutral on the weekly. You can see it's in that moving average range, but it's heading further to the downside, so we might see it break below that in the coming days. And on the daily, it's already bearish. And again, we had a bearish divergence versus higher highs in the price. It actually broke down, hit our target area. And I didn't mention on gold, but the target area we choose is basically before that divergence started. We go down to the recent low to the high, and that's the Fibonacci range. And we choose the 38% level minimum target. And you can see there it's hit it quite easily. And now it's bouncing off that 38% level on the daily time frame. I'll just delete that and make it a bit cleaner. And looking at the hourly chart, again using the daily as a reference, we're going short only. You would have taken a short position from that point there. You can see that on the hourly chart. You would have, if you got in early there, you would have got into that little trade there. Alternatively, you would have got into that. That went pretty much sideways, and then another decline there, and at the moment you'd avoid going short until you see the CCI break below on the moving averages. So again, just hold off going short. We only take short trades when based on a higher time frame again. This is the US dollar, and you can see here it's bullish on the monthly. It's bullish on the weekly and also bullish on the daily. So going along only on the smaller time frames based on the high time frame trends. And I've got here as well some arrows indicating where you could have gone long, and you'd still be in a trade there on the weekly, and also there fresh breakout there on the daily. You'd still be in a trade on that one as well. On the hourly chart, again using the daily as a reference, going long only. So you would have started from going long from that point there when it broke above the moving averages, and that equates to going back there. That's the 9th of June. Go back to the 9th of June. That was from this point on. So you would have taken that, start going long from that period. A little false break there. Could have averaged down on that one and into the second lot there. And you closed it out there. Another average down there. Closed it out. Going long. Closed it out. And you'd been a long trade today with this little entry there. Lastly, we'll look at Bitcoin, and Bitcoin's bullish, although notice it's pulling back ever so slowly, but it's bullish. On the weekly, it's bearish. It's broken below the moving averages, giving us a bearish signal. And again, following those arrows, indicating a short positioning to be taken from there. And on the daily, likewise, it's bearish. Again, bouncing off that, if I zoom out, bouncing off that resistance at 71,950. And currently hitting this minor support at 60,219. And the next level of support will be 56,566. But again, taking short trades only. So going to the hourly chart, again looking at the daily as a reference, only short trades. You would have started taking a short trade from that bar there. That was the 11th of June. Zooming out to the 11th of June, back here, you would have taken some short trades there, and that would have been from that point, 11th of June. Nice little trade there, another entry there. Some of these you might have got out with a small stop loss, or if you average down, all little trades to be taken, and that would have been a nice little trade today on that little distance there as well. You'd probably you're not in a trade at the moment that's going long on the hourly, so wait for another bearish signal to break to the downside. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.